Welcome to the deep dive. So, if you're following the news cycle lately, um, the anxieties are pretty hard to miss, right?
Yeah, definitely.
We're looking at some of the highest national debt levels ever, uh, these stubborn inflation worries, and this huge escalating rivalry between the U.S. and China.
It feels intense.
And underneath all that, there's this kind of nagging question about the dollar.
Hmm.
Is it going to stay the world's main reserve currency?
It really does feel like things are, well, maybe unraveling a bit in real time. But here's a thought. What if all this instability, these crises you're seeing, aren't actually unprecedented chaos?
Okay.
What if they're more like visible symptoms of a really predictable script, one that's been playing out for centuries, right on schedule?
That's a provocative idea.
And it's basically the core argument in Ray Dalio's big work, Principles for Dealing with the Changing World Order.
Right, okay, let's get into that.
Cool.
For anyone who doesn't know, Dalio founded Bridgewater Associates. It became, well, one of the biggest hedge funds globally. So this is someone who's spent, what, 50 years actively grappling with global markets, macroeconomics, on a scale that very few people can match.
Exactly. And his perspective is valuable because his research, this deep dive into history, it wasn't just academic curiosity.
No, it was practical.
It was a professional necessity, a tool he built to try and anticipate what's coming next, economically, politically, better than anyone else, just to keep the firm running.
So he's the ultimate data guy, but applied to history.
You got it. A data-driven macro historian. His main idea, and he built this by studying the last 500 years, the Dutch, the British, the American empires.
Their rise and fall.
Precisely.
Mm-hmm.
His thesis is that history doesn't repeat exactly, but it definitely rhymes. It seems to unfold in these massive, predictable patterns he calls big cycles.
Like the life cycle of an empire.
Kind of like that, yeah. Usually spanning maybe 200, 300 years.
And these cycles, they touch everything, don't they? Education, productivity, military power, even the trust in the country's money.
Absolutely everything. So our mission today really is to unpack Dalio's framework. These archetypical mechanics, he calls them.
Okay.
We want to use it as a guide to see the patterns, what makes empires succeed or fail, and, crucially, try to figure out where the big players, especially the US and China, might stand in this big cycle today.
Looking for those signals that the ground is shifting under us.
Exactly. Are the tectonic plates moving? Let's find out.
All right, so a cycle that lasts centuries.
Yeah.
That's got to be driven by some really powerful, deep forces. Dalio says it's not just one thing, but like an interplay of three main cycles.
Yeah, they're totally connected, symbiotic even. The first one is the long-term debt and capital markets cycle.
The boom and bust we hear about.
Kind of, but stretched over a much, much longer timeline. Think 75, maybe 100 years. It typically involves this huge buildup of debt.
Financing spending, speculation.
Oh, right. Until you hit a point where the debts just can't be paid back in the normal way. And that forces, big restructurings, or critically, the central bank has to step in and print a ton of money.
Fiat currency flooding the system.
Exactly. And that financial pressure, that immediately feeds into the second cycle, the internal order and disorder cycle.
Okay, so this tracks things like the wealth gap.
Precisely. The gap in wealth, opportunity, even shared values between the rich and the poor. As that widens, you get more resentment, more political polarization. Conflict escalates.
Leading to harmony or well, the opposite revolution, civil war.
That's the spectrum.
Yeah.
And then think about it. When a nation is distracted, weakened by fighting internally, stressed financially,
It becomes vulnerable.
right, vulnerable to the third pillar, the external order and disorder cycle. This is the classic geopolitical struggle. The dominant power versus a rising rival.
Which can lead to testing each other's strength, sometimes war.
Yep. And the key thing Dalio stresses is how they reinforce each other. A huge debt problem makes internal fights worse. And that makes a clash with an external rival way more likely.
That makes sense. Okay, so that's the overall mechanic. What about the beginning, the rise phase? What does a nation need to climb out of whatever came before war or revolution and start that upward climb?
Well, first off, it absolutely has to start with strong, capable leadership, ideally pragmatic leaders who design a good system.
And Dalio finds capitalism generally works best here.
His research points that way, yeah,
Hmm.
because it incentivizes productivity, innovation. He even points to China, run by the Communist Party. But they adopted a state capitalist approach under Deng Xiaoping. Why? Because it worked to mobilize people and generate growth.
Got it. But the best system needs fuel, right? Which you mentioned is human capital.
And this is so much more than just test scores. Dalio really hammers this point. True human capital means education that builds knowledge, skills, and critically strong character. Civility, a disciplined work ethic.
So valuing hard work over just inheriting privilege.
Exactly. When a nation gets that right, the cycle really starts to accelerate.
And that disciplined population, they start inventing things. Innovation and inventiveness.
Directly. The rising power moves from just making basic stuff to creating new cutting-edge tech. Think about the Dutch back in the 17th century.
Yeah.
At their peak, they were apparently responsible for something like a quarter of all major global inventions. They basically invented modern capitalism, the ship that could travel the globe. That's how they dominated trade.
And that innovation leads to growing economic power, more productivity, more competitive exports.
A bigger slice of the world trade pie. And, the source material notes something interesting here for today.
What's that?
The trajectory is pretty clear now. The U.S. and China are already roughly comparable in economic output, share of world trade. That signals, the U.S. cycle maturing and China's ascent being very real.
Okay, and if you're trading globally, you need to protect those routes. Military strength.
Essential. No empire keeps its trade routes safe or protects its interests abroad without the military muscle to back it up. Dalio's pretty blunt, he says. The international order, especially when things are shifting, runs more on the law of the jungle than international law.
Oof. Okay, so economic power, military power. What are the final stages of this rise?
They're financial. You need robust, transparent capital markets. Good ways to take the nation's savings and channel them into productive investments for the future.
Like Amsterdam, London, New York becoming financial hubs, and now Shanghai.
And Shenzhen, yeah, that's a key part. And then the final crown jewel, the ultimate sign of dominance, is achieving reserve currency status.
The dollar today.
Exactly. It's this amazing privilege where your currency is just accepted everywhere for trade, for transactions, and other countries actually want to hold it as savings.
Which gives the U.S. huge buying power, leverage, lets it run massive deficits because the world buys the debt.
Pretty much, yeah. It's an extraordinary privilege, as Dalio calls it. Once a country gets that, the empire is basically at its peak.
And inevitably, the clock starts ticking down, the decay sets in.
It always does. The first signs are usually internal. A loss of competitiveness and hard work.
How does that happen?
Well, the country gets rich, people get used to the good life, labor gets expensive, so you're less competitive globally. And crucially, the culture shifts.
The decadence idea again.
Right. The generation that fought tooth and nail to build the wealth gets replaced by generations who just inherited it. Values change. There's less focus on discipline, hard work, the very things that fueled the rise.
And that often shows up financially, right? Overextension and financial bubbles.
Absolutely. When things have been good for a long time, people just assume it'll continue forever. They borrow more and more, often fueled by cheap money from the capital markets.
To consume more or speculate on assets going up forever.
Yep. Creating these unstable financial bubbles.
And when those pop, the underlying problems get exposed, which fuels the really dangerous part, widening gaps.
Huge gaps. Wealth, opportunity, even values.
Yeah.
The difference between the haves and have-nots grows massively.
And Dalio sees this as a critical warning sign for internal conflict.
Oh, absolutely. It's self-reinforcing. He notes that when wealth concentration gets extreme, like the top 0.1% having as much wealth as the bottom 90%, the political system starts breaking down.
How so?
The wealthy use their influence to keep the system tilted in their favor. Meanwhile, the majority, who are struggling, losing jobs, facing hardship, they turn to populists, leaders who promise radical change, who channel that resentment.
And the stage is set for serious internal disorder.
Palpably set. To really see this whole rise and fall mechanism play out, let's look at that case study, the Dutch Empire. You mentioned them earlier.
Yeah, the classic example.
Totally. Their rise was built on pure genius, really. Innovation ships, finance, great education, and they created the guilder. That was the first real global reserve currency after the Middle Ages.
Okay, but how did they decline?
It follows the pattern perfectly. The decay started when they kind of shifted focus, less on the hard graft of invention and trade, more on, well, living the good life, as you said. Decadence.
Well, the British.
The British were watching. They copied Dutch methods, hired cheaper labor, and crucially, they caught the wave of the Industrial Revolution. They surpassed the Dutch in manufacturing trade. The Dutch East India Company, meanwhile, got bloated, overextended.
Okay, but here's the fascinating part you mentioned earlier about the currency.
Yes, this is so relevant for today. The Dutch guilder, its reserve currency status, it lagged behind the actual decline in their economic and military power by decades.
So the world just kept using it out of habit.
Pretty much. It was sticky. People were used to it for transactions, for holding value. Even after Britain was clearly the dominant power, the guilder held on.
Wow. So the currency's strength was like a ghost of past glory.
That's a great way to put it. It wasn't until a perfect storm hit specifically, they needed cash to finance losing battles in the Fourth Anglo-Dutch War in the 1770s.
A liquidity crisis.
Exactly. And the Bank of Amsterdam made the fatal mistake. To cover the war costs and losses, they started printing money. That caused a run on the bank, and poof, the guilder's reputation as a reliable store of wealth just collapsed abruptly.
That is a huge insight. Reserve status is sticky, can make people feel secure, but when it breaks fast, often triggered by financial stress or a military shock.
It's episodic, not a gentle decline. That's the critical lesson.
Okay, so Dalio doesn't just tell stories about the past. His whole thing is measuring this stuff, right? Creating a framework to see these forces in real time.
Exactly. He points out that the very forces of capitalism that create the boom, like rising productivity, also, kind of inevitably, lead to those big wealth gaps and eventually too much debt.
So what specific things is he tracking now to see where, say, the U.S. and China stand on this cycle?
Well, he focuses on indicators that show internal sustainable strength versus external weakness or overextension. Human capital is still number one.
But again, not just test scores.
Right. He stresses that while scores matter, the most sustainable capital comes from cultivating strong character, civility, a real work ethic focused on productivity. He points to places like Singapore or the modern Netherlands.
Small countries, not huge resources.
Exactly. Proving that high-quality human capital is maybe the only truly enduring way to generate wealth.
Okay, and that connects to something psychological you mentioned, the ability to learn from history.
This is huge because the really big extreme events, think depressions, major wars, currencies collapsing, they typically don't happen within one person's lifetime.
So you don't experience it directly.
Right. Most people live through maybe one kind of economic environment and they just project that forward, maybe tweaking it a bit. They completely miss the possibility of these wild cyclical swings. If you haven't studied, say, the 1920s or the 1940s, you're likely to be totally unprepared when similar conditions return.
And what's the human flaw that makes these cycles even worse?
The propensity for short-term gratification, especially in politics.
Oh, wanting the good stuff now.
Absolutely. It's natural, right? Look, prioritize enjoyment now over discipline for the long term. And politicians are under immense pressure to spend now, often by borrowing, rather than do the unpopular things like raising taxes or cutting spending.
That lack of discipline makes the debt booms bigger and the busts harder.
Classically, it just pushes the country deeper into fragility over time.
Okay, let's get specific. Let's apply these measures to the U.S. position today. Where does Dalio's data put the U.S. in the big cycle?
Well, his quantitative models, crunching dozens of metrics, innovation, debt, conflict levels, you name it, place the U.S. roughly 70% through its cycle.
70%? Wow, that sounds late stage.
It puts the U.S. firmly in what he calls stage 5 precariousness. That's the stage marked by really bad financial conditions, extreme wealth gaps, intense internal conflict, basically the last stage before potential civil war or the final loss of reserve currency status.
That's a stark assessment. What's the data showing on that internal conflict piece?
On internal conflict, the gauges are flashing bright red. The U.S. ranks highest among major countries right now for political strife, partisanship, just general internal discord.
Really? Highest.
According to his conflict index, yeah. The levels are comparable to only two other really high-stress periods in recent U.S. history. The early 1920s, with that deep recession and labor unrest after World War I, and the late 1960s, the civil rights Vietnam War era.
And the common theme is breakdown of shared values.
Yeah.
Distrust.
Deep distrust in governing institutions, yeah. Breakdown of civility.
Okay, and the financial side, the debt burden, that's maybe easier to quantify.
It is, and it's structurally worrying. The U.S. ranks poorly because the debt is enormous compared to assets. But it's also the pace of increase in dollar debt and money creation that's alarming.
Meaning?
Fundamentally, U.S. incomes are too low relative to its expenses, and the country's total liabilities are astronomical compared to its net income. It means the U.S. is structurally dependent on the rest of the world buying its debt just to keep functioning.
Which leads directly to reserve currency risk. If the U.S. needs the world to hold its debt, how is the dollar's status actually threatened?
It's really two big things. First, the U.S. government is paying practically nothing in nominal yields on its debt, like Treasury bonds. And when you factor in inflation, the real yield is negative.
So you're guaranteed to lose purchasing power.
Exactly. Why would anyone, especially foreign governments, want to hold large amounts of an asset that guarantees they lose real value? Logically, they won't over time.
And the second threat?
The sheer speed at which the U.S. is creating new dollar debt. It's becoming structurally hard to imagine finding enough buyers in the market without the Federal Reserve having to step in and buy huge chunks itself.
Which is basically printing money, devaluing the currency.
That's what monetization is, yes.
So it sounds like this structural weakness is just sitting there waiting for some kind of event to trigger a break, like the Dutch guilder story.
That's the fear. The historical pattern for reserve currencies isn't a slow fade. It's often abrupt, episodic. Confidence gets lost suddenly, maybe triggered by a geopolitical clash, maybe a really bad debt ceiling fight where the U.S. government actually defaults.
Something that shatters the trust?
Precisely. And the move away from the dollar wouldn't be like 1% a year. It would likely accelerate very quickly once that confidence breaks.
Okay. Heavy stuff. Now let's pivot. Let's look at the China position, the ascendant rival. How does that picture contrast?
China looks much younger, much more disciplined in Dalio's cycle framework. Economically, they're seen as being in a somewhat favorable position.
Why favorable?
Well, their government debt is relatively low, maybe around 48% of GDP. They still have high expected real growth rates projected over 4% a year. And critically, something like 96% of their debt is in their own currency, the renminbi.
So they owe the debt mostly to themselves internally, not in dollars or euros.
Massive difference. It hugely reduces the kind of external debt risks the U.S. is facing.
And just in terms of pure economic size, trade.
China's #1 in trade now, and closing the gap very fast on overall economic output. It reflects that incredible acceleration since Deng Xiaoping started the reform and opening up back in the late 70s.
So Dalio sees them positioned to potentially surpass the U.S. on most power metrics within, the next decade or so?
That's the trajectory his indicators suggest, which makes this rivalry fundamentally different from the Cold War.
Right. How is this geopolitical rivalry really different from the U.S. versus Soviet Union?
The Soviets were mainly a military and ideological rival, right? They never really had the economic clout, the tech base, the financial power to truly challenge the U.S. across the board.
Okay.
China is a challenger across all those dimensions: economic, technological, financial, and military. And while the U.S. military is stronger globally, Dalio notes China is now arguably stronger militarily in its immediate neighborhood, the East and South China Seas. And the speed of their military buildup is creating a really dangerous dynamic.
A test of limits. Dalio also says this conflict doesn't necessarily start with shooting, but with other kinds of struggles already underway. He lists 5 types of war and says 3 are very active now: trade, tech, and capital wars.
Yeah, those non-military fronts are crucial. The trade war is the classic stuff: tariffs, import quotas, using regulations to block your rival. Think Smoot-Hawley tariffs back in 1930. The real escalation is cutting off access to essential resources, like the U.S. did to Japan before World War II. It becomes about leverage, not really negotiation.
Then the really high-stakes one, the technology war.
This is a key vulnerability for China, still. Despite huge progress, they rely heavily on importing certain critical technologies, especially the most advanced semiconductors needed for AI supercomputing.
The things the U.S. is trying to restrict exports of.
Exactly. The U.S. can and is weaponizing that dependency through export controls. Dalio warns that if the U.S. were to completely cut off China's access to essential tech they can't make themselves, that would be a massive escalation. China would likely see it as an existential threat to their rise, significantly raising the risk of actual military conflict.
Wow. Okay. And finally, the biggest financial weapon the U.S. has, the capital war.
This is the financial nuclear option, really, stemming from the dollar's reserve status. The goal is to cut your enemy off from capital, freeze assets, sanction their banks, block them from global payment systems like SWIFT.
Sounds powerful. But is there a downside?
Huge potential boomerang effect. If the U.S. takes drastic action against, say, China's holdings of U.S. debt or restricts their capital flows, every other foreign holder of dollar assets gets spooked.
They worry it could happen to them next.
Exactly. So using that capital weapon too aggressively could actually accelerate the decline of the dollar's reserve status, the very thing the U.S. wants to preserve. It might hurt China short term, but it could seriously damage global confidence in holding dollar assets long term.
It's a trap.
A real double-edged sword. The ultimate financial trap, perhaps.
Okay, this whole mapping of history and geopolitics is fascinating, but Dalio's ultimate aim seems practical. How do we translate these huge macro cycles into something useful for individuals, investors, leaders, making real-world decisions?
Yeah, absolutely. And maybe the single biggest lesson is to fight against that natural human bias towards linear thinking.
Assuming tomorrow will be like yesterday, just a bit different.
Exactly. We have to really grasp that what you face later in life might be the complete opposite of what you experienced earlier. Think about a generation growing up with peace and low inflation.
Only to face war and currency problems later.
Right. And because the really big lessons, like the dangers of governments printing massive amounts of money, don't happen every generation, you have to study history. Dalio suggests looking back at least to 1900 to get a sense of the full range of possibilities. It's about self-protection, really.
Okay, so if the end of this big cycle typically involves governments having huge debts, printing money, devaluing currency, which sounds a lot like today, what does that mean for us personally, financially?
It means diversification and resilience become absolutely critical. History is very clear. Holding cash that earns interest or government bonds becomes incredibly risky late in these long-term debt cycles.
Why risky? Isn't cash safe?
Not when governments are essentially forced to print money to cover their massive deficits. That printing devalues the currency, meaning your cash and bonds lose real purchasing power. Cash stops being a safe place to store value.
And there's historical data on this.
Oh yeah, stark data. If you look at asset returns during periods like 1910, 1920, around WWI, or 1940, 1950, around WWII, in major countries like Germany, Japan, France, people holding cash and bonds saw enormous losses in real terms over those decades.
Basically taxed away by inflation and devaluation.
Pretty much. So historically, what do people do? They try to get out of that debt, cash and bonds, and into assets that might hold value better.
Like what? What were those better storeholds of value during past crises?
Generally, real assets. Things like gold, sometimes commodities, maybe inflation-linked bonds if they exist. Also, potentially equity in companies that have pricing power, meaning they can raise their prices to keep up with inflation.
Because these things represent tangible resources or productive capacity, not just a promise of fixed payments that get eroded.
Exactly. It's about understanding that the central bank isn't acting to protect your savings. It's acting based on the pressures of the government's debt cycle. That's a vital distinction.
Okay, let's shift to the internal side again. Dalio talks about those widening wealth and opportunity gaps feeding the trap of populism and division. How does that play out politically, and why is it so corrosive?
Well, those deep structural gaps almost inevitably lead to more tribalism, more extreme conflict. You see the rise of populism on both the left and the right, like we see in the U.S. now.
What's the common thread?
Both sides tend to be intensely anti-establishment. They want strong, uncompromising leaders, fighters who will represent their side against the perceived enemy. Whether it's progressives challenging the system or conservatives fighting the deep state, the focus becomes confrontation, not collaboration or compromise.
And that just makes the internal disorder worse.
Exactly. Populism rising alongside these huge gaps leads directly to things you see historically just before major internal conflict. People start disregarding rules and laws, debates become emotional attacks instead of using facts, civility breaks down. The goal isn't finding common ground, it's achieving total victory over the other faction, which of course paralyzes the government's ability to actually solve the long-term problems.
And this is amplified by the collapse of trust in institutions, like the media, which Dalio also highlights.
Absolutely. Trust in the media is near historic lows in many places. That puts a huge burden on you, the individual citizen, to develop extraordinary personal discernment.
How do you even do that?
Dalio offers a practical filter. When you see a story, ask yourself, is this based on actual, verifiable facts and sources, or is it mainly designed to trigger an emotional reaction based on accusations without proof? If facts seem secondary to pushing a sensational narrative, you're probably looking at propaganda designed to fuel division, not inform.
Okay, makes sense. Finally, let's touch on leadership again. Understanding where you are in the cycle helps define what kind of leader is actually needed, right? The requirements change.
Fundamentally, in the very early stages, stage 6, stage 1, right after a war or revolution, the main job is just consolidating power, establishing basic order. That often takes a strong, politically savvy fighter. Think Caesar Augustus in Rome or Napoleon in France, someone who can command obedience to build a new system from scratch.
Okay. Then what about the rebuilding phase, stage 2, when the country is laying the groundwork for that long upward climb?
That requires a totally different type. The civil engineer leader, someone focused on building practical systems, strong institutions, focused on long-term economic health. Leaders like Lee Kuan Yew in Singapore or Deng Xiaoping in China, they built productive systems that lasted long after they were gone.
Right. And then what about the later stages, like stage 4, the excess stage, when the country is already rich, maybe complacent, definitely leveraged?
That requires a very specific and maybe very rare type of leader, a well-grounded, disciplined manager. Someone who can resist that huge temptation to just keep borrowing and consuming.
Someone who preaches prudence.
Exactly. They need to focus on fiscal discipline, reinvesting in actual productivity, maybe trying to restore some of that cultural discipline lost to decadence. But that's arguably the hardest leader to get elected, right? Because they're essentially campaigning on less immediate gratification.
Okay, so we've walked through the mechanics of Dalio's big cycle. We've looked at the current readings, the U.S. in a precarious stage 5, grappling with debt, internal conflict, China as the ascendant rival, lower external debt, high growth. And these forces seem to be accelerating.
Yeah, and I think the big takeaway, the reflective point, is that while history suggests no empire lasts forever, the overall story of humanity is one of rising inventiveness, rising productivity over the very long term. These cycles are like the violent, painful bumps along that upward trend.
So the cycles are real, but there's progress underneath.
Kind of. And for a country like the U.S. today, Dalio suggests the biggest risk isn't really the external rival, China. It's internal. It's the division, the failure to face the challenges honestly. Can the country find the unity and will to make the tough structural reforms needed to prevent its debt cycle from spiraling? That's the core question.
What's really interesting, though, is how today's technology throws a wrench in things. Dalio mentions AI, computing power. These things drastically boost thinking capacity, potentially accelerating productivity way faster than ever before.
It's a massive potential boost, but it creates this huge paradox, doesn't it?
How so?
Well, while overall productivity might soar, these same technologies could make huge numbers of people economically uncompetitive. Their jobs become unprofitable or inefficient compared to AI or automation.
Which would make the wealth gap even worse.
Potentially, yes, exacerbating that wealth distribution challenge, maybe fueling the next round of internal conflict even faster than the historical cycles might suggest. It's a real wild card.
And that brings us right back to the immediate geopolitical flashpoint. Dalio calls the Taiwan situation an unstoppable force. China's rise meeting an immovable object, the U.S. commitment to the status quo. So, if we're seeing this classic confluence of high internal conflict, massive debt, a powerful rising rival, the historical conditions for war.
Then the big question for everyone, especially investors, is if world orders do rise and fall, and the biggest financial shock is often the abrupt failure of the dominant reserve currency, what assets truly hold value through that transition? Beyond the historical answers like gold or commodities, what might be the most resilient storeholds of value in whatever new world order eventually emerges? What are the new tools of civilization that will command value in the next cycle?
Definitely something to think about as these historical cycles keep turning. Thanks for diving deep with us today.
My pleasure.
We'll catch you on the next deep dive.